Democratic Republic of Congo President Felix Tshisekedi is expected to arrive in China this Wednesday for a 5-day official state visit. Economic issues will be front and center as Beijing, of course, is Kinshasa's top trade partner and major mining investor. Our editor, Charles Pellegrin, is here with more. Hi, Charles.
Hi, Aaron. Absolutely. The visit will obviously include a meeting with a Chinese president and leader, Xi Jinping. Now, the trip will be closely followed by international observers as the DRC's cobalt mining sector is crucial to the development of batteries and to the transition to a greener economy. And China is the dominant player in that sector to the extent that the DRC's Vice Prime Minister and Foreign Minister Christophe Lutundula was already in China earlier this week to prep for Tshisekedi's visit. With elections in sight at the end of the year, the Congolese president will be keen to revisit the landmark 2008 deal, the Sikamine Resources for Infrastructure deal with China, which exchanged the Congo's natural resources for Chinese infrastructure, Chinese-made infrastructure, a deal worth $6.2 billion with $3.2 billion invested in copper and cobalt mining, and $3 billion, which was supposed to be invested in infrastructure thanks to that mining revenue. While Tshisekedi has been critical of the deal, saying it was poorly negotiated by his predecessor, Joseph Kabila, and favors China. Kinshasa says that China has so far only released a third of the promised infrastructure funds. Another criticism of the deal was that it understated the amount of cobalt reserves in the country, which is responsible for about 70% of the world's production. Tshisekedi will also be discussing ways to upscale the country's mining sector by encouraging Chinese companies to invest in building an electric vehicle supply chain inside the country. Well, those differences aside, the Congo's ambassador to China stressed to Chinese state media the importance of the bilateral relationship. Take a listen.
Since our independence, we have not seen other friendly countries achieve what China has done in the Democratic Republic of Congo. When you look at the great infrastructures that the DRC has today, for example, the football stadium, a large stadium with 80,000 seats, it is the product of cooperation with China. Our People's Palace is also a product of practical cooperation with China, and we are experiencing the fruit of this in our country.
Other countries, though, are looking to rebalance their economic relationships with China. Australia, for instance. Canberra has been on a drive to diversify its trade relationships away from Beijing, its top trade partner. It's in this context that Indian Prime Minister Narendra Modi met with Australian Prime Minister Anthony Albanese this Wednesday. Two struck new agreements on migration and green hydrogen and discussed increased cooperation on mining and critical minerals. Catherine Viet has this.
A rock star welcome for the Indian Prime Minister.
Prime Minister Modi is the boss.
As Australia seeks to forge closer trade ties with New Delhi, a move welcomed by Prime Minister Narendra Modi.
Strategic partnership.
India and Australia's strategic partnership is getting deeper. We recently signed the Economic Cooperation and Trade Agreement. It is estimated that the trade between our two countries will more than double in the next 5 years. Now we're working on a comprehensive economic cooperation agreement.
China is currently Australia's largest trading partner, but with a more assertive Beijing imposing restrictions on certain Australian products in the wake of the pandemic, the government is keen to diversify its export markets. One of the country's key products is lithium, a necessary component for making electric car batteries. Australia is the world's biggest exporter of the critical metal, with most of it currently going to China, which dominates the lithium-ion battery production market. As India builds its own electric vehicles industry, Australia sees a new opportunity. Trade between the two countries hit $31 billion last year, and Australian Prime Minister Anthony Albanese said he and Modi expect to complete negotiations on a free trade deal before the end of the year.
Let's have a quick look at the markets before we wrap this up. European indices are trading lower at the open as U.S. debt talks are still dragging on, even as the White House has been saying there is progress. Fears increasing that the U.S. might actually default on its payments. As you can see, the Paris CAC 40 down over 1%, the DAX in Frankfurt down almost 1%, and same for the FTSE in London. Some good news in the UK, though, as inflation fell below the 10% mark for the first time since August. And most major Asian indices are traded lower as well on those U.S. debt concerns. As you can see, the Nikkei in Tokyo finishing the session down 0.9%. The Hang Seng in Hong Kong down 1.5%. The Kospi in Seoul, the best performer in a way, closing the session at 0%. Aaron, that's the end of the business bulletin.
Charles Pellegrin, thank you very much.